Michael Gapen of Barclays Capital joining us on the show. Michael, do you see danger of flight of capital and return of risk aversion because of the geopolitical events in Ukraine?
Then you tend to see a flight to quality. You buy safer assets like U.S. Treasuries. The yields there are down. And also you buy things like gold, which tend to be viewed as safe havens in very uncertain outcomes. So far it's been generally a classic risk-off move, and one that's been reasonable inside. I wouldn't say that things are too disorderly right now, but certainly it's a market where people are trimming risk appetite and taking a wait-and-see approach.
Michael, so wait and watch for now, but in the longer term, what are you watching?
The thing to watch longer term, and I think the key for at least the U.S. economic outlook, is that what happens to energy prices. The U.S. consumer is the most energy-sensitive consumer globally. For the consumer in the rest of the world, it tends to be food prices. So the U.S. has a pretty good outlook for 2014 and 2015, and that's been supporting equity market valuations and risk sentiment. But higher oil prices would be something that would feed back as a drag on consumption.
So, Michael, other than high crude prices, there is also a threat of sanctions. Does that impact the global economy?
If it's something that goes just to the point of saying freezing certain assets and capabilities and travel of Russian citizens, you might expect the impact to be relatively muted. But if it goes further, and we're talking about something that would restrict trade flows, or something that would lead, as I just mentioned, to higher oil prices for the U.S. or higher natural gas prices for Europe. As we know, the Ukraine is a natural supply for Europe energy products. Then you have a different story.
So, Michael, is Ukraine a genuine risk-off event?
These types of geopolitical events get everybody nervous. We don't really know where this is going or exactly how it will unfold. So the general response is you take a little bit less risk or trim your risky position. So you've seen equity markets down in Europe and in emerging markets. We're also seeing that here at the open in the U.S., and you tend to see a flight to quality.
Michael, good chatting with you. Really appreciate you taking the time out and speaking with us today.